Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for our three-day Metals and Mining Conference. Our first presentation today is from Canada Nickel Company. Please note you can submit questions for the presenter in the box to the left of the slides, and you can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome our first presenter of the day. He's Mark Selby, Chief Executive Officer of Canada Nickel Company, which trades in the OTCQX Best Market under the symbol CNIKF and on the TSXV under the symbol CNC. Welcome back, Mark.
Great to see you again, John, and thanks for the opportunity, and thanks for those who've tuned in today. Glad to give everybody an update on the very exciting things that are happening at Canada Nickel. I will be making a number of forward-looking statements, so avail yourself of all this 6-point type. Oh, I went a bit too far. So in terms of why Canada Nickel versus the other investment choices out there, I say number one, in terms of the nickel market, longer term, we are going to be fundamentally short of nickel. There is little to no supply growth outside of Indonesia and China. And we're at the point now where Indonesia is effectively the OPEC of nickel, controlling more of the nickel market than OPEC did at its peak, and is now, starting to take steps to manage supply and manage prices, which will be very supportive to nickel in the medium to long run. I'll talk about that more in a few slides. In terms of the company itself, we're focused on unlocking the Timmins Nickel District. We have our flagship Crawford nickel sulfide project, which we're advancing towards a construction decision later this year. Along the way, we've gotten some great cornerstone shareholders. So Agnico Eagle, one of the world's largest gold mining companies and our neighbor in the district. Samsung SDI, who's one of the world's largest battery makers. Anglo American, which is obviously one of the big mining companies globally. And then most recently, Tequatagamu Nation, who's one of the First Nations community, who's using their capital to take a significant shareholding in the company, I think, which is a very strong and robust endorsement, which should, reinforce the fact that, we've got very, very strong community and First Nation support. In terms of Crawford itself, it's the second largest nickel reserve and resource. We just announced 6 weeks ago our front-end engineering design, which takes the engineering to another level beyond feasibility study, and very happy with the results, not only confirming the values that we had, but seeing a meaningful step up in terms of value with only a small increase of 5% in the overall capital cost. We are well down the path on permitting. So we filed our environmental impact statement. That completes the second of 3 key stages in the federal permitting process. And we are on track to receive that federal permit by this coming fall. We started, in terms of overall project financing activities last fall, made some substantial steps with Export Development Canada, stepping up for a $500 million letter of intent as part of the debt facility and agreeing to be the mandated lead arranger for that debt facility. And then a $500 million support letter from another financing institution. I think this is one of the key things with Canada Nickel, and I'd encourage you to look at Canadian critical minerals opportunities more broadly. With that funding support, with the investment tax credits, which are effectively free money to the company from the government, with the government stack of capital there, we're in a position where, we only have to provide a small amount of equity to get the full, talking about, 10 cents on the dollar to be able to unlock the overall project. And again, we're looking at selling down a portion of the project to a project partner or offtake financing to get that 10 cents. So, not looking to any significant equity dilution to move the project forward. One of the key things with Crawford and the type of deposits we have in the Timmins Nickel District, their deposits are hosted in rocks that spontaneously absorb CO2. We developed a process which we call IPT, or in-process tailings carbonation, where we inject CO2 as the material is getting processed through the mill. And that would allow us at Crawford to store up to 1.5 million tons of CO2 per year, which would make us one of Canada's largest carbon storage facilities, as well as one of the world's largest nickel sulfide operations. That as a result, that would end up with a net negative footprint of about 30 tons of CO2. And again, from a government funding perspective, it allows us to tap into some fairly substantial tax credits from the government for that. So in addition to Crawford, when we realized we were having great success with Crawford, these type of deposits have a very distinct geophysical footprint. And so we use that free government geophysical data and used it to identify and consolidate 20 plus targets within 100 kilometers of Timmins. That target footprint has 25 times the footprint of Crawford. And so, we're in excellent shape that way. We are publishing 8 additional resources by mid-year. Reed and DeLauro have already been published. With those resources published, we expect that the Timmins nickel district will be the world's largest sulfide district. So more contained nickel than's been mined in Sudbury to date. That's the scale of the opportunity. And again, in nickel, there's been very few new nickel discoveries, and we're quite fortunate to be unlocking this potential in an area that's a very, very well supported, lots of infrastructure mining region in Timmins. And we're also advancing our downstream processing plants to process the nickel and the magnetite concentrates our project can produce, so that we can deliver product both into nickel's historic uses in stainless steel and alloys, but also into the battery market, and maintaining complete flexibility on that way. Let me just talk about the nickel market for a few slides. So first off, nickel demand is something that's often underestimated by analysts. Nickel demand to date has grown at nearly 9% a year since the start of the decade. At that rate, if we continue through the end of the decade, we're nearly 6 million tons. Our original forecast when we started the decade was to get to over 5 million tons, which is almost a doubling of where we were in 2020. Indonesia is going to deliver a substantial amount of that nickel, but we need nickel from somewhere other than Chinese-controlled, high carbon footprint, high environmental footprint nickel from Indonesia. If you compare these growth rates demand-wise, that's a multiple of what you would see with copper, steel, and other materials. And what happens is commodity analysts tend to use those lower growth numbers for materials they're more familiar with and sort of spread them over the different things. So nickel is something that's always tended to outperform analyst forecasts in that dimension. In terms of Indonesia's dominance, it really is the ONEC of nickel. If you look at the chart on the left, Indonesia on its own now controls more of the nickel supply than OPEC did at its peak back in the early 1970s. We all knew what OPEC did back at that time with oil prices, and not expecting anything that dramatic with the nickel market. But that being said, nickel is a very important commodity to Indonesia, and the value of those exports has a material impact on the overall recovery. If you look on the chart to the right, that orange line that you see trending upwards, is the share of nickel and stainless steel exports, which is a way to export nickel as a percentage of Indonesian exports. During that 10-year period, Indonesia went from being a country that always had a trade deficit, always had a current account deficit, to a country that had a trade surplus and current account surplus. With the fall off in nickel prices we saw over the last 2 years, those accounts have now turned back to deficit, and so it's in Indonesia's interest to manage nickel prices higher, and we think we can see nickel prices move up to the $18,000 to $20,000 a ton level to maximize Indonesian revenue without them incenting much additional supply to come online. The good thing is we can generate significant cash flows at those nickel prices, and as Indonesia's ore grades, because they've mined very aggressively, we think prices are going to move higher. What we've seen in Indonesia is what we call a triple high grading. They've been high grading for nickel grade, high grading for iron to nickel ratio, and chemistry in terms of being able to produce the product. Laterite deposits are basically soggy dirt that extend over very large lateral expanses, and it's very easy to go around and pick the eyes out of that. So they've been high grading these deposits now for close to 20 years. And so you've seen a continual decline from over 2% to 1.8% to 1.5 to 1.6. And now you're seeing, marginal ore supply trend as low as 1.4%. So you've seen the Indonesian government last summer really try to squeeze nickel supply. They sort of took their foot off the gas last spring, but we've continued to see ore prices trend both from the Philippines and Indonesia, which are the primary suppliers of laterite ore. They're trading at close to three-year highs, and we expect that trend to continue as we move forward, because that's the way the Indonesian government is going to push prices higher. Seeing that push price higher. The chart on the left is Indonesian and ore prices from the Philippines. The dotted line is from the Philippines. The yellow line is the ore price within Indonesia. And you can see that these prices have largely closed. And that gap, and we expect them to trade close together for quite a while and continue to see them move higher. When Indonesia squeezed ore prices, the Chinese plants went and grabbed supply from the Philippines, almost to the extent of 8% of global supply was being imported from the Philippines to Indonesia. To use the OPEC analogy that would be like Saudi Arabia importing oil from Iran, Iraq to keep their refineries full. That should underscore the fact that, we are not awash in high-grade ore availability, and that availability is going to diminish over time, as I said, which should be very supportive to prices in the long run. So Crawford, this is, we're quite fortunate. We are literally up a provincial highway about 30 minutes north of Timmins. We have all the major infrastructure you need in place: power lines, rail lines, hydro lines. We have access to low carbon grid electricity, which is relatively low cost. We'll be extending the existing rail line about 10 kilometers north into the property site, and that will give us rail access to all industrial sites in North America, and rail access to ports on both the East Coast and the West Coast of North America. So in terms of a location to build a large-scale mining operation, this is about as good as it gets in terms of where to build an operation. Additionally, we have about 60,000 people in a number of communities who are less than an hour's drive from the mine site. So again, unlike many new discoveries that are in remote areas, we're quite fortunate to be in a position where we'll have a labor force that can drive home every night. Those are always lower cost, more productive than fly-in, fly-out operations, and again, helps make this a structurally low-cost operation. We completed the feasibility study back at the end of 2023. Very happy with the scale there of what we're doing. So $2.5 billion NPV, 17% IRR. When we're fully ramped up, we'll be just under 50,000 tons of nickel per year, and a 40-year mine life. So this is, a world scale asset in terms of what we're trying to do. Again, with the structurally low cost area that we're located, and then the significant byproduct credits from the iron and chrome and cobalt that will also be producing, we end up with relatively low cash costs, and again, quite comparable and cash positive, even at today's nickel prices. And you can see the kind of cash flows we expect the project to generate. We start at a 60,000, it's an open pit mine mill operation that we start at 60,000 tons a day. We twin it 3 years out, go up to 120,000 tons of ore a day and process that out to the end of the mine life. And again, robust cash flows through each one of these cycles. The feed results that we announced in March, again, looked at focusing on the initial capital cost. The feasibility study had a pricing date as of the end of 2022. So this is nearly 2 years later that we're going through it. So again, in a period where we saw lots of inflationary pressures, we were able to keep the overall capital cost increase to about 5%. So very happy with that. And again, because of changes in mine sequence, and some of the other things that we explored, we're able to generate significant additional value, through the feed process. This feed process will now be the basis for which we resume our project funding discussions. we're working with Scotia and Deutsche Bank and Cutfield Freeman to put together that financing package, and the goal here is to have the funding package in place by year end. In terms of, again, the quality of this asset, this is an asset, that is world-class on many dimensions. So in terms of cost curve, well located in the first quartile of the cost curve. In terms of carbon footprint, even before our carbon storage capacity through our IPT carbonation process, which stores 1.5 million tons of CO2, because we have access to low carbon grid electricity, because we've designed the mine to take maximum benefit from that, we have a very low carbon footprint relative to the existing nickel industry. And again, that carbon footprint gets negative when you include the carbon storage dimension of it. We're the second largest nickel reserve today. We would be the third largest nickel sulfide operation globally, and the Western world's largest today. So the two other ones are in China and Russia. And again, in today's geopolitics, Western world is a term we used to use 20 years ago at Inco, stopped using about a decade ago, but I think given the current geopolitics, is something that's going to be increasingly important. So, again, this is the scale of an asset that much larger mining companies would, ultimately fit into their portfolios. In terms of our carbon capture, we're quite fortunate that our rocks spontaneously absorb CO2. So the picture on the right, the rock comes out of the ground dark black to dark green. If I left a chunk of it on your desk at home, within a year, it would have this white coating all over it. That white coating is a mineral called magnesite. It's a magnesium carbonate mineral. And how it gets there is the dark rock. Basically, there's minerals in there that grab a CO2 molecule, convert themselves into a new mineral, and trap the CO2 in the lattice of that new mineral, which is the white magnesite you see on the outside of that. Our process basically just harnesses that spontaneous process, and with very simple bubble and stirring, allows us to store 1.5 million tons CO2 per year when we're fully ramped up. Timeline wise, we're pushing to get permits, get funding in place by year end, so that we can make that construction decision at the end of this year. One thing I would like to highlight, particularly for U.S. investors in the call who may not be as familiar with Canadian politics, we just went through an election at the provincial level. We just completed a federal election. Both governments have been very supportive of critical minerals, have announced a number of various initiatives, but given all of the issues with tariffs and so forth, their determination to accelerate critical minerals project is very clear. The Ontario government announced another $500 million fund for critical minerals projects, of which there's a short list of us that can come online before the end of the decade. So that level of government funding commitment and government support has only gotten stronger through both sets of elections that have happened. And so again, I would stay tuned on that front through the balance of the year. With a construction decision, we're looking at just over a 2-year construction period. We'd like to get first ore through the mill by the end of 2027 and start to ramp up through the balance of 2028. So that's Crawford. So again, a world-class deposit on its own. But what was exciting for us, using the geophysical template that we had, was identifying the 20+ targets in the Timmins area. As I said, we have nearly 25 times the footprint that we have at Crawford, which contains almost 10 million tons of nickel across all categories. We've already successfully tested 18 of the properties we have. 10 of them have a bigger footprint than Crawford. So everyone on our team believes Crawford will be our first project. Everyone on our team believes that Crawford won't be our best project. And I'll show you an example in more detail. Agnico Eagle gave us $35 million to go drill off the region just to see how much we had. We've had a 98% success rate in terms of our targeting. We announced drill results from 13 properties. There's very few majors who have that kind of portfolio in a commodity. Most juniors are lucky to have 1 or 2. The fact, again, that we are really unlocking here an entire district in an excellent location where you can actually build mines is exciting. We bump into high grade as we move. We think we'll bump into more high grade as we continue to explore. the area. We've published 2 additional resources already in addition to Crawford. And as I said, we expect to publish another half dozen by mid-year. And again, we've been able to effectively cut and paste our flow sheet that works for Crawford and see how it works on these other deposits. With a long-term plan here of effectively what we build at Crawford, we should be able to cut and paste it into different location, into the different projects in the region. Our high-grade discovery was our Bannockburn. You can see the core here, some massive sulfide. Again, we've got large volumes of nickel like we have here in this region. Even if a small percentage of it gets remobilized and concentrates into higher grade, it definitely opens up the potential for higher grade opportunities. But to give you just a visual example of the scale and the quality of some of these other targets, on the right is our Crawford project. That's our engineered shell. The pink is the target footprint that we're going after, and the resource correlates quite closely with that target footprint. This deposit is a 2.3 to 1 strip ratio life of mine. You can see our Reed deposit, which we published in an initial resource, and we've continued to drill to make even larger. It's a multiple the size of Crawford. You can see the dimensions of it and the geometry of it. The strip ratio longer term, if this plays out the way we think, would be approaching a 0.5 to 1 as opposed to the 2+1 strip ratio we see at Crawford. And so again, very, very excited about the potential at Reed, and there are several other deposits that are larger scale, better geometry than what we see at Crawford. Again, just to show you on similar scales, we had Reed on the prior slide, and these are some of the other giants, the 3 giants we're calling them, with Reed, Man West, and Midlothian. Again, very large footprints, larger than Crawford, and again, we've had great success drilling these, and you'll see resources on these published through the balance of this year. Here's a list of the resources that'll be published. We've got a number of additional targets, some of which we still haven't drilled yet. And you can see the scale relative to Crawford that we're looking at with that. So, we really are unlocking an entire district, a district that has the potential to be the world's largest nickel sulfide district in a world where, we've had very few new large nickel discoveries. And so it's great to be able to unlock the potential of this region. If you look at nickel, the way nickel deposits are made, there's some very specific geological conditions that have to occur. Most of the world's nickel comes from just 6 regions, and we think that Timmins has the potential to join this list. If you look at how nickel's been developed, it's been new approaches, and again, these large bulk tonnage ultramafic deposits, we think are the next generation of nickel, particularly as they can be developed with a relatively low carbon footprint. And we've got a leading position in terms of understanding of developing nickel ultramafics. With the nickel there, again, our team came out of Inco. Inco ran global processing facilities around the world, and we expect to build processing facilities in Timmins to process the metal. Again, just like Crawford, where there's access to significant government funding, there's even more government funding available for processing plants. And so, we're quite confident that we can, develop these projects with very little capital. We've got an experienced team that's doing that. We're using proven technology to be able to do this forward. And again, Timmins is an area that's not only supportive of mining, but supportive of processing. And so, that's a whole other business that we're, advancing to unlock value. So, for 2025, as I wrap up, what you'll see is 6 additional resources published. So we'll have 9 in total for the region. We've completed the front-end engineering design. We're well down the path on definitive agreements with First Nations. We're working with our partners at Scotiabank, Deutsche Bank, and Cutfield Freeman to get our full funding package together. We'll see the downstream feasibility study completed at year end, and then we expect to receive the major federal permit this fall. So thanks for your time, and I see there's a number of questions there, so I'll just flip over to the Q&A session at this point. Okay. So the first question is around capital needs over the next 2 years and the role of offtake agreements. So right now, in terms of the overall project funding, we expect the bulk of that to come from a sale of up to 30% of the project. So we'll end up with 60 to 70% of Crawford, and or offtake funding from different partners. We have Samsung SDI in place. They have the option to buy 10% of the project for $100 million US, which is a significant premium to where we're trading today in order to obtain offtake from the project. We're having great discussions with companies in Korea, Europe, and Asia. And again, we looking to have those in place by year end. And that would provide, those agreements provide the bulk of the funding that we would need going forward. The next question is around the nickel market. We may need sulfide nickel separate from China-controlled Indonesian output, but will financiers and governments require it of OEMs like the EU is now? So far China controls that nickel price narrative. So, to that extent, I don't know if governments and financiers will require it, but I know, there's a pretty good correlation between the quality of the automobile brand that we're in discussions with and the requirement and the intensity with which they're looking for nickel supply from elsewhere other than Indonesia. So I think, there's already enough sort of moral suasion from producers who know that a lot of that Indonesian nickel, and again, would encourage you to take a look at, there's been a recent ABC7 Australia video that went behind the scenes that did a great job of showing the kind of operating conditions that they do and the lack of environmental and safety controls. In terms of controlling the price narrative, I would say China and Indonesia to date have done that. I think now Indonesia is in the driver's seat. It is again, it's a one country OPEC of nickel. The price of nickel and stainless steel matters to the Indonesian economy. They only have so much material, and so it makes sense for them to maximize the value they get from that very limited resource as things move forward. So as I said, we started to see Indonesia flex its muscles last year. I think we'll see more muscle flexing as the year goes on, and that'll be very supportive to nickel markets going forward. Okay, another question's come up here in terms of our downstream. Where'd it go? Oh, the question was there, it was gone. It was around our downstream processing. Oh, here it is. The nickel from our Canadian nickel mines. Yeah, the process is designed to use feed from our mines, but can take a wide range of feeds and convert them into nickel products that can be used by either the stainless and alloy steel industry, which is nickel's traditional use, or the EV battery market. So we're looking to process nickel as well from other parties, as well as Canada Nickel. All right, well, that was the last of the questions I saw posted. Thanks to everyone who tuned in today. You can reach me at markselby@canadanickel.com, or through our links on the website. And we're looking forward to a very, very exciting 2025, and looking to have that construction decision on Crawford by year end, and really demonstrate by mid-year the potential scale of what we have in the Timmins Nickel District. Thanks very, very much. Take care.